actually go through some various and assorted tax credits. Hi, I'm Beth Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance-related news. Come learn how to grow and keep your wealth. Now, tax credits are awesome because they dollar for dollar reduce the amount of tax you owe. And sometimes they can even generate a refund. We're going to do a high-level overview of these credits, so we're not going to dive into the nitty-gritty details, but just keep in mind that not everybody qualifies for every credit. So, how do you figure out if you qualify? Well, first off, have an amazing tax preparer, right? Go to a great CPA or an enrolled agent, or if you're brave and you're willing to try it, go it alone, but run through the software and see if you qualify. And you could be really old school and do it on paper and pull up the IRS worksheets, but that sounds like a nightmare. I would not recommend that. Generally, some of these are going to be a little obvious. Parents, there's a lot of credits out there for kids. They don't end up being a ton of money compared to how much kids cost, but just know that they're out there, and it's worth asking your tax preparer, do I qualify? Because you might be surprised. The other thing is, not everybody's income level is at the level that the IRS wants you to be at to claim these credits. So for some people, some of these credits are not going to be available if they make too much money or do what we call phasing out, which means your income is higher than the range that the IRS will pay the credits out for. So it can be a little bit complicated. I'm not going to go into super detail on every single one, but let's run through some of these goodies that hopefully, if you're qualifying, you're taking advantage of. Child tax credit. Woo, that one got expanded. And you might have seen, if you have kids in the last year, or you had kids before, you saw this in the last year, that you were getting like monthly payments from the government. And this was an advance on child tax credits. But not everybody got it. Not everybody's was calculated properly. If you had a new child in 2021, they probably weren't figured into the calculation. So you're going to want to make sure when you do your taxes, if you have kids, especially if you have a newborn in 2021, make sure you're getting your full child tax credit. Who qualifies child tax credit? Really, it's going to be kids, like generally up to 18. There's some other qualifications for kids that are a little bit older, in the 19 to 24 range. They have to be full-time college students, though. But those can be your natural born children, adopted children, stepchildren, foster kids, could be sibling, half-sibling, step-sibling, grandchild, niece, nephew. You have to see if you qualify or if that child qualifies you to get the credit based on a bunch of rules with the IRS. So check that one out. Recovery rebate credit. This is a credit if you did not get a stimulus payment, and you really have to go and check. The IRS did send out letters telling you if you received the stimulus payments, how much you got, if you got them. And if you go, oh, I don't know, I'm just going to claim the credit, you're going to mess up your taxes if you're trying to claim a refund, and it's going to slow down the processing time. So take a moment, find that letter that the IRS sent, or go online, irs.gov, to your account, and you can see a transcript that shows whether or not you got that credit or that stimulus payment. So if you didn't get the stimulus payment, you're going to want to go ahead and claim the recovery rebate credit, which is going to make up for any missing stimulus payment. Earned income tax credit. So this credit is for low to moderate income workers and families. It's kind of in the name what it's for. If you've earned some income, you get a tax credit, but it's generally very low income people who are getting this credit. There are a lot of other qualifications. This is a credit that probably has the most fraud out of all credits in existence. So make sure if you're trying to claim this credit that you really truly qualify, because you don't want to get in trouble with the IRS on that one. The lifetime learning credit. This is for higher education, meaning after high school. There's not a ton of restrictions on who can claim it, but you have to be footing the bill for higher education costs. There's a phase out on this, like there are on others, and the credit is worth 20% of the first $10,000 you pay to college. So it's not a small amount. Now, related to that lifetime learning credit is the American Opportunity Credit, and this is really just for the first-time college students for their first 4 years of college. So it's a little bit different from lifetime learning. If you've got a student, or if you are the student and it's your first time going to college, you're probably going for American Opportunity Credit first. And then after you exhaust that credit, you can switch to the lifetime learning credit, because they're not like one or the other. It's usually progresses. So if you're going to stay in school or go back to school at some point later, you can possibly take advantage of both of them. Child and dependent care credit. Parents, yet another credit for you. Now, this is specifically for households where you're paying for childcare or dependent care because you need to work, or if you're not employed because you're trying to work. There are some other things that can qualify you for child care credits. Again, got to look into it and see if you fit into any of those scenarios. But you claim per child, or not necessarily child, per child or dependent, and it's on a per provider situation. So if you've got a child that goes to aftercare, and you've got that could even be the same child, also goes to summer camp, all of those costs might help qualify for this credit. So again, you got kids, talk to your tax preparer about it. And the last one we're going to talk about is the Savers Credit. So this is for individuals who contribute to an IRA, an individual retirement account. Or it could also be if you're contributing to your employer-sponsored retirement plan, like a 401k. You have to be at least 18, so it is for adults, and you can't be a full-time student, and no one can claim you as a dependent. So you have to be kind of out on your own. And the income levels for this are a little bit on the lower side. So if you're kind of new to being out on your own and filing your taxes for the first time, it's worth talking to a tax preparer to see, hey, if I put money into a retirement account, do I qualify for that one? So that's kind of the list. Oh, wait, no, I did have one more. I'm sorry. Adoption tax credit. How can you forget that one? The adoption tax credit is actually quite a big credit. Let me see. For 2021, the max amount was $14,440. Woo! It's a big credit, but anybody who's adopted a child knows that the costs are way higher than that. And this covers adoption fees, court costs, attorney fees, traveling. There's a lot of expenses that go into adopting a child, so this is a huge credit to help offset some small part of that. Okay, now we got through all of those credits. Thank you for sticking around. I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy.